Hello folks, this is Toby and, I'm Toby in fact, have been all my life. About 6 months ago I gave you a little bit of a prophecy, if you like, my prediction of the market and how it would go. We had some very big interest rate rises and there was a lot of doom and gloom in the air in the press, and actually I was predicting a lot more positivity. I'll always put my sort of hand on my heart on my sleeve, and I'll tell you if I'm wrong. And it does seem, sadly, that over the last 6 months my predictions are very quick moving markets and prices going up were somewhat misled or misleading, and we haven't had that sort of boom yet. But it's not all bad, so I thought I'd just give you a few stats and facts to sit with you, and if you'd like some more of them, please do email me directly and I'll be happy to share them with you. Our friends at lomres.com have got this outstanding information that really gives you a proper idea of what the market's doing. So I suppose first things first is the bad news, or maybe not so bad when it comes to prices achieved. On an annual basis, every quarter we get these reports, and in SW5 prices are down 6%, 1.9% in SW7, W8 1.7%, SW10 actually no change whatsoever. So actually, as an average on price drops, that's not too bad. I mean, 6% down in Earl's Court isn't great though. The most sort of sad facts are transaction volumes in SW7 and W8. They're down 25% and 30% on the year. A quarter of people less are buying than they used to. But I suppose that the worst stat that I'm going to give you today is actually the discounts, the average discounts from asking price to achieve price. SW5 10% down, South Kensington 11% down, W8 7, and SW10 8% down, which is quite a price drop. If you think about the sort of boom days of 2014-15, we were achieving actually over asking prices, not actually expecting price drops. But to actually get 10% lower than the price we're achieving does say that it is a buyer's market at the moment. But hold that thought for a little bit. People often ask me when's the right time to buy, and I often sort of slightly flippantly saying there's no bad time to buy. But I would say actually as a buyer right now it's a good time. There are lots of landlords who are giving up the ghost on their investments. Interest rates have taken quite a toll on them recently, and that may have a big impact on the prices they're willing to accept at the moment. And probably that most revealing stat at 10-11% price drops at the moment are to do with those landlords selling who have owned properties for a long period of time. Yes, they would have liked to achieve 10-11% more, but actually it's still a hell of a lot more than they invested 25 years ago. So I think we're in quite a short window of time at the moment, ladies and gentlemen, that if you are a buyer, there are some good bargains out there. But this won't last forever. What we're seeing at the moment, which does collude with what I was saying at the start of the year, is that we were registering about 30 buyers a week in December. That's now jumped to 60 buyers a week, so double the amount of buyers that we were registering 6 months ago. So it's only a period of time where demand, being so high, will actually make prices go up, and that's exactly what we've seen in the lettings market. Prices are up by 25% due to the fact that the supply is so little and demand is so high. And I think a lot of those tenants who are looking at the rental market and saying, I don't want to pay that sort of price more, double the price for a flat that's half the size, they're becoming buyers actually. So they say, hey, I prefer to spend 4, 5, 6% on interest rates rather than waste my money entirely on rentals. So if you take my advice, there are always little windows before a market boom that people say, oh, I wish I'd bought then. And my feeling is, now's that time.